Welcome to Dr. Mohammed Muhaizam bin Musa's class. What lies ahead is a journey into the heart of the financial world, a deep dive into the intricate workings of banking, international trade, and finance, and the crucial role Treasury management plays in it all. We'll be unraveling the complexity of financial markets, shedding light on their key players, and exploring the myriad of products they offer. Why is this important, you ask? Well, understanding these concepts can help you navigate the financial landscape, make informed decisions, and even potentially predict market trends. It's like being given a roadmap to a city before you visit. It makes exploring so much easier. But the financial landscape isn't just about understanding the present, it's about anticipating the future. We'll take a look at the challenges and risks inherent to financial markets and discuss the ever-evolving regulations put in place to manage them. So, buckle up and let's dive into the fascinating world of financial markets and their role in banking and international trade. So, who are the key players in the financial markets within the banking industry? Well, let's dive right in. The financial market is like a bustling city, and in this city, there are a few key players who keep the wheels turning. The financial market consists of 5 major areas, which includes money market, foreign exchange market, bond market, capital market, and derivative market. First up, we have the banks. These are the skyscrapers dominating the skyline, the pillars of the financial city. Banks, both commercial and investment, act as intermediaries, facilitating transactions between borrowers and lenders, buyers and sellers. They also provide a safe place for individuals and businesses to deposit their money. They play a crucial role in 2 particular areas of the financial market: the foreign exchange market and the money market. In the foreign exchange market, banks buy and sell currencies, making international trade possible. This market is like the city's airport, connecting our financial city to other economies around the world. Next, the money market. Banks, along with other financial institutions, borrow and lend short-term funds here. Think of it as the city's power station, ensuring there's a steady flow of liquidity to keep cities' lights on. Moving on, we have the traders. These are the market's heartbeat, providing liquidity by buying and selling financial instruments like stocks, bonds, commodities, currencies, and money market instruments. They're like the city's taxi drivers, constantly on the move, navigating the ebb and flow of the market. Then, we have the investors. They're the visionaries, the city planners if you will, looking for opportunities to grow their capital over long term. These can be individuals or institutions like pension funds, insurance companies, or mutual funds. They inject capital into the market, investing in businesses and projects they believe will yield a return. Finally, we have the regulators. They're the city's police force, ensuring everyone plays by the rules. They monitor the market's activities, enforce regulations, and step in when necessary to maintain stability and integrity in the market. Now, these players don't exist in isolation. They're constantly interacting, creating a network of relationships that form the financial market's ecosystem. Banks lend to businesses, which traders invest in, and investors provide the capital for. Regulators oversee these transactions, ensuring they're conducted in a fair and transparent manner. It's like a well-oiled machine, each cog playing its part. But remember, this machine is complex and dynamic. It's influenced by various factors from economic trends and political events to technological advancements and societal changes. These players with their roles make the financial markets a dynamic and complex system. Whether you're a student of banking or a casual observer, understanding these players, their roles, and their impact on different aspects of the financial market, including the foreign exchange and money market, can help you navigate this bustling city we call the financial market. Now, let's explore the products that keep these markets moving. In the world of finance, there are a variety of products that traders and investors use to navigate the markets. Each of these products has unique characteristics, purposes, and mechanisms. Let's delve into a few of them. First up, we have bonds. Bonds are essentially loans that investors make to entities like governments or corporations. In return, these entities promise to pay back the original amount, plus interest, on a specified maturity date. Bonds are a way for organizations to raise money, and for investors to earn a predictable return. Next, we have stocks. When you buy a stock, you're buying a piece of ownership in a company. The value of stocks can fluctuate based on a company's performance, market sentiment, and broader economic trends. Stocks can be a bit of a roller coaster, but they offer the potential for significant returns. Then, there are derivative market, which offers futures, options, and swaps contracts. Futures contracts are agreements to buy or sell a specific asset at a set price on a future date. They're used to hedge against price fluctuations and to speculate on price movements. It's like making a bet on what the price of something will be down the line. Options are similar to futures but with a twist. They give the holder the right, but not the obligation, to buy or sell an asset at a certain price before a certain date. This means you can choose to exercise the option if it's profitable, or let it expire if it's not. Lastly, we have swaps. Swaps are agreements between two parties to exchange cash flows or other financial instruments. They're often used to manage risk, such as interest rate risk or currency risk. Each of these products serves a specific function in the financial markets. They offer a range of possibilities for traders and investors, from the safety and predictability of bonds to the potential high rewards and risks of stocks, futures, options, and swaps. These financial products facilitate trading and investment, forming the backbone of the financial markets. Financial markets are not without their risks and challenges. This statement rings true for everyone involved, from the individual investor to the largest financial institutions. The dynamic nature of these markets brings a variety of challenges that those operating within them must navigate. One such challenge is market volatility. It's the rapid and significant price fluctuations that could occur in the market within short periods of time. This uncertainty can make it difficult to predict and plan for the future, and can potentially lead to significant losses. Closely tied to market volatility is the challenge of economic downturns. When the economy takes a nosedive, it tends to drag the financial markets along with it. The recent global recession is a clear example, with markets worldwide experiencing sharp declines. But it's not just about the challenges, the risks are equally significant. Let's talk about credit risk first. This is the risk that a borrower will default on any type of debt by failing to make required payments. If the party at the other end of a deal fails to live up to their obligations, it could result in losses for the lender. Then there's market risk. This is the risk that the value of an investment will decrease due to moves in market factors. It could be interest rates, stock prices, or even foreign exchange rates. It's the reality of the market. Prices go up and down, and there's always a risk that they'll go down when you least expect it. Operational risk is another key player. This concerns the potential for loss arising from failed or inadequate internal processes, people and systems, or from external events. It's the things you can't predict or control that can sometimes hit the hardest. Lastly, we have liquidity risk. This is the risk that a company or individual will be unable to meet short-term financial demands. It's about being able to turn assets into cash quickly without a loss in value. Understanding and managing these risks and challenges are crucial for success in the financial markets. It's a complex world out there, but with knowledge and foresight, it's one that can be navigated successfully. Regulation plays a key role in maintaining the integrity of financial markets. Just as a referee ensures fair play in a game, regulatory bodies in financial markets ensure fair and transparent transactions. They protect investors, maintain market stability, and facilitate capital formation. In Malaysia, for example, the Securities Commission, SC, and the Bank Negara Malaysia, BNM, are two key regulatory bodies. SC oversees securities transactions, activities of financial professionals, and mutual fund trading to prevent fraud and intentional deception. BNM, on the other hand, supervises and regulates banks to protect consumers and maintain the stability of the financial system. But let's not forget, financial markets are not static entities. They are continually evolving, influenced by technological advancements. The future of financial markets is digital, and it's changing faster than ever. Digital banking, for instance, is shifting the traditional banking paradigm. It offers the convenience of banking anytime, anywhere, right from your smartphone. It's not just about online transactions anymore. Digital banking is transforming into an all-encompassing platform offering services from loans and investments to insurance. The central bank digital currency, CBDC, a new concept where a country's central bank issues a digital currency, is another game changer. It combines the convenience and security of digital form, like cryptocurrencies, with the regulated, reserve-backed money circulation of the traditional banking system. And finally, there's blockchain, a revolutionary technology that provides a transparent, secure, and decentralized method of recording transactions. With blockchain, financial transactions can be verified autonomously without the need for intermediaries, reducing cost, time, and potential for fraud. These digital trends are not without challenges, of course. As our financial system becomes increasingly digital, Issues of cybersecurity, privacy, and digital divide come to the fore, but with the right regulations in place, we can navigate these challenges and shape a future where the benefits of digital finance can be enjoyed by all. The future of financial markets is digital, and it's changing faster than ever. Let's summarize what we've learned today. We've explored the intricate world of financial markets and discovered the various players that make it tick, from banks to brokers. These entities employ a range of products such as bonds and securities to facilitate their operations and capitalize on market trends. We've also delved into the risks and challenges these players face. From market volatility to regulatory hurdles, navigating the financial market is no small feat. Despite these challenges, the industry continues to evolve and innovate, with digital banking, central bank digital currency, and blockchain leading the charge towards the future. These topics are just the tip of the iceberg when it comes to understanding the complexities and dynamics of international trade and finance. The journey to mastering these concepts is exhilarating and rewarding, offering a world of opportunities for those who dare to venture. Thank you for joining Dr. Mohammed Muhaizam bin Musa's class today. For more information, visit mohammedmuhaizam.weebly.com.